It's April 16, 2014. Current time is 10:19 GMT. Jay Meisler here with the Daily Forex Trading Outlook. Just a reminder, this is the pre-Easter week, Easter long weekend week, holiday week for many. Liquidity tends to be on the thin side, will get thinner, and as you can see with the price action overnight, market does not have a strong ability to absorb flows. So just keep that in mind when you trade. But we have had some pretty good moves overnight. We'll start with dollar yen, and I'm going to use the daily chart. You can see here how it continues to hold the 200-day moving average, which is around 100.81 today. And as long as that holds, you can assume the market will be looking to buy on the dip, deep dips anyway, unless this is broken. On the upside, we came above 102 finally after trying it for almost 2 weeks here, a week plus. The 20-day moving average is 102.50. The 100 is 102.94. And you can see by the chart, there's not that much on the upside until we get to about above 104. So we're not running into key stops. 102.50 is clearly the key level after bouncing off 101.50 yesterday. So I revert to 101.50 to 102.50, and then within that zone, 102 is going to set its tone. So we have a buy on dips as long as we're above 102. That's where we are on that, but we're still within this broad, basically 101 to 104 range. Till that's broken, the market will not set its sights at 105, although it's still on the radar by many. So that's it in dollar yen. You look at sterling, that's actually an interesting one. Bounced on data, you can see here that 168.22, which I've been pointing out for several weeks now, remains the key obstacle on the upside. We got up to 168.20 a couple of days ago, 168.17 today. So I don't know if you call this a head and shoulders or whatever it's going to be, or reverse head and shoulders, I guess. But whatever the case, 168.22 is major resistance here. Unless that's broken, I guess the market trades in this bipolar type range where it makes runs to one side and the other, and the range has narrowed, but that's clearly the level to watch on the top side. Now if we go to the euro dollar, didn't have much reaction to the CPI numbers, and we'll talk about that later, but at the end of the month is the next flash CPI, and that expected to tick up, so maybe it's not going to overreact to any interim data. If you look at the euro dollar, we came down into this range here. We held, we held down above that 137.78. We tested 138.50 today. And if you look at you can take the 4-hour chart or the 1-hour chart. They show the same thing. We filled this gap on Monday. Still the high is in at 138.63, possible Monday effect, where if the Monday high is set on Monday, we reverse down later in the week. We'll see if that ensues, but that 138.63 level, so make it 138.60-65 is the key level on top. Upside will be limited unless we get through it. 138.60 to 65, 138.50 is going to set its tone. We're within 138 to 139, so 138.50 capped it. On the downside, 138.30 to 35 has been the resistance level until today, so that's possible support. We'd have to get back below 138.20 to put 138 in play again. So 138 figure to 50 is kind of like 20 to 50 is kind of like a no man's land. Not much to go for in between. Maybe some stops above 50, but more important will be that 60 to 65 level. Unless we take that out, the upside is going to be limited. Today we have U.S. data coming out. The data is we have industrial production and housing starts. Markets looking for a rebound to continue from the winter weather. So it's treating it as as fresh data, although you have taken into account that it's coming off a weak winter, so the numbers should look better in general. Probably most important will come tonight. And there's a beige book also, but Yellen speaks tonight, the Economic Club of New York, and that tends to be more policy oriented. Market will expect her to be dovish, so anything other than more dovish tilt would be the surprise. So that could be the key event today, but it's not going to happen until after the close. Now, one thing here, I'm putting a link down at the bottom of this page. It's called to an article I wrote, Avoid Dumb Trades and Dumb Stops. If you're a trader and you want to stay in this business, you have to read this article. It'll put things in perspective for you, give you some really good insights and some strategies for trading. So it's Avoid Dumb Trades and Dumb Stops. It's right here. Click on the link in the video and go to the article. Good luck and good trading.